It's almost 1 p.m. in Sydney, 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Japanese stocks weighing down Asia's benchmark as the BOJ rate hike reignites the yen rally. Real estate names, the biggest losers in Tokyo as the currency punches through the 150 barrier. Also ahead, US futures pointing higher after the Fed chief signals a rate cut as soon as the next meeting. The Bank of England makes its decision later. Plus, we speak exclusively with the UOB CFO. Shares dipping following results indicating an increase in non-performing loans. First up, though, let's check in on how markets are doing. Avril Hong is in Singapore. Avril.
Yeah, Paul, we are clearing some of the uncertainty out of the way for markets, aren't we? After the BOJ, we had the Fed and Powell's comments really causing swaps markets to fully price in September and expect another 2 cuts by the end of the year. So 3 cuts almost fully priced in by the markets now. So equities are mostly doing well. Look at the way the Kospi is faring, as are some of these Asian currencies. But Japanese ones, deeply negative. Take a look at how the Nikkei and the Topics have been faring today. And this is against the backdrop of Ueda sounding more hawkish than expected, signaling more rate hikes. We're seeing dollar yen also climbing below the 150 level. And we're also seeing a bit of a reversal in Chinese equities from that strong rally yesterday. But flip the board, in terms of stocks, the other sector that we've been really keeping a very close watch on are the chip names, as the Biden administration has been weighing out these restrictions to curb China's access to semiconductors. Yesterday, we heard how the likes of ASML and Tokyo Electron could be exempt. Now we're hearing that Micron, SK Hynix, Samsung Electronics, they could be in the crosshairs. But if you look at the market reaction, they seem to be faring more according to the macro side of things, as the tech stocks are doing pretty well. It's against the backdrop of what we got from the Federal Reserve. Tokyo Electron, a bit of it is the profit taking, but also consider how the strength in the Japanese currency is playing out on Japanese stocks. Paul.
Yeah, you mentioned that yen strength. Where are we? 149.76 now. How about the other Asian currencies, though? What are we seeing there?
Yeah, specifically for the ones in Southeast Asia, traders expect further upside. It's not just about the Federal Reserve. It's also because of how the yuan and the yen have been climbing. And if you take a look at this chart, it shows you the 1-month risk reversals for Southeast Asia FX. It's at a 5-month high. And this tells us that there's a premium for being hedged. That is to the upside. They're expecting more gains in some of these currencies. All this is against the backdrop of what we got from Powell a couple of hours ago. So have a closer look at what he had to say.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. We have made no decisions about future meetings, and that includes the September meeting. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September.
All right, let's get more on markets now with Niraj Seth, CIO and head of APAC Fundamental Fixed Income at BlackRock. He expects up to 4 Fed rate cuts from September through to January. So, Niraj, we heard Jay Powell there talking about if labour market and inflation data meets the test. Walk us through your scenarios for if. You're quite optimistic when it comes to the Fed rate cutting cycle.
Sure. First of all, I would, in fact, highlight one point. The biggest shift, if we look at the Fed statement and most of the press conferences, 6 months back, the bar to cut rates was very high. Now, given what we heard yesterday, the bar to not cut rates in September has gone high, which means in a base case scenario, unless something changes dramatically, I do believe we will see a rate cut in September. And the markets, in fact, will go back and forth between a 25 versus a 50 basis points debate. The second, in terms of the rate cuts, I would put a range of 2 to 4 cuts. Obviously, you have 4 cuts as a possibility, but depending on the data and obviously the political outcome in the US presidential elections, you are now in that range of 2 to 4 cuts, and markets are somewhat in that pricing right now of 2.8, 2.9 cuts by end of this year. So I think we are moving towards the easing cycle. That's unambiguous.
Neeraj, 4 cuts, though, that would suggest an economy in dire need of support. Does that call into question the whole soft landing scenario?
Not really. I would argue, in fact, that basically just proves the requirement of the inflation moving towards the Fed target. Now, if you think about it, the rates are at 5.38. The last core PCE was at 2.6. And if it's drifting lower towards the Fed target, the real rates are fairly restrictive and high. So I don't think 2 or 3 or 4 cuts actually reflect a dire need for the economy because it's actually in doldrums. It's more of just bringing the rates lower or real rates lower to create more room in the economy without really going excessive in terms of easing.
What about for curve steepening on the 530s? Is it going to be more rates driven or fiscal driven?
I do believe in the medium term it's going to be more fiscal driven. I do think if you look at the overall fiscal deficit financing requirements in the US, they're not coming down going into the next year, despite who goes into the White House. So the whole overall bull steepening of the curve in a 12-month horizon is still much more fiscally driven than actually rates driven for the back end of the curve.
Okay, let's talk about Japan. Do you see this as a central bank that is fully in normalization mode?
They are in normalization mode. Would they be very hawkish all along as we look forward? I am not sure about that. Now, yesterday, clearly the rate hike was not fully in consensus. So obviously you got a slight surprise, and we've seen the dollar yen move initially by the BOJ decision, but it also moved further by the Fed decision. Now, when you look at the normalization with regards to the balance sheet, that was not very aggressive. We're talking about going very gradually to 2.9 trillion by January of 2026, 400 billion a month. It reduces the balance sheet by 7 to 8% by that time. So I don't think it's a very hawkish positioning of BOJ. They are obviously moving towards normalization. Question is how aggressively they hike from here. I still sit in a base case. We probably get one more hike this year and further hikes in next year.
Do you think actually what we got from the BOJ yesterday then was more geared towards the Japanese currency? I mean, say what we want about central bank independence, because when you look at inflation or weak consumer spending, it doesn't really justify the case for that rate hike.
Well, the inflation justifies the case for a rate hike. Inflation has been, in fact, persistent in Japan more so than ever before. But to your point, one important key that obviously is still a concern is the domestic consumer spending is not strong. So the central bank is obviously trying to thread the needle here in terms of having that balance. And the currency does play a role because obviously the move in the currency going all the way to almost 162 in July was putting a lot of pressure on imported inflation. Hence, the market gave the central bank a window to hike and at least put a floor here. Now, path forward, I think there's still going to be data dependency and a focus on the domestic conditions, including the consumption, I would expect.
Neeraj, just in a logistical sense, do you have a sense of frustration around how the BOJ conducts itself around these meetings? I mean, there's no time for the release of the decision. We saw the website getting all gummed up. There were questions around the translation of what Governor Ueda actually said. How hard is it trading around these sorts of conditions, and do you think there needs to be a bit of reform?
So that's a more fundamental question. I think, first of all, this is how it has been with the BOJ decision making as far as I can remember in the history. So this is not new. But with regards to a bit more of telegraphing the decisions, the ease from a foreign investor perspective, I do think a lot of those, in fact, aspects are very much in play as Japan looks at more of internationalization of Japan, the local domestic markets. I would expect that to actually become more foreign friendly. But all in all, this is not new. This has been in place for a very long time.
Given the Japanese and some Chinese currency strengthening, do you think that's going to provide further fuel to the rest of Asia's currencies, given how the Fed's kind of, taken some of the risk out of the way as well?
Absolutely. I actually think it's unambiguous positive for the region from a currency perspective, because if you take a step back and think about it, the weakening of yen that we were observing, now you had the carry trades building up, but more importantly, from a medium-term perspective, you had more risk of the trade competitiveness because of the currency shifting in terms of how the region behaves. Now, that is a challenge because if Japanese yens keep sliding, it obviously puts pressure on a lot of the other trading partners and more export-oriented countries in Asia. So with these currencies stabilizing, it actually gives a better backdrop for Asian currencies to perform.
Neeraj, I just want to talk to you about something we're seeing in the US as well in terms of the election. It's been a wild ride so far, and we've still got a few months to go. But with Kamala Harris enjoying a honeymoon period in the polls, do you see these Trump trades continuing to unwind? How do you see that situation evolving?
So I think, well, first of all, trying to speculate at this point the election outcome and trying to play that, it's a little bit tricky in my mind. But obviously, given the markets are looking at the odds shifting very quickly over the last few weeks, we have seen some of the what you would define as the Trump trades unwinding. And I think we're closer to now at least clean up in the markets. And we'll go back and forth between now and 5th of November, and it might go even longer to get a decision. So I don't think you want to speculate too much. From a fundamental standpoint, again, there's a good backdrop for fixed income. I think the Fed policy path is more important in my mind if I take a 12 to 18-month view rather than trying to speculate where the elections are going.
Do you think the currency risk for Asia bonds are, fully priced in already?
Currency risk in terms of the dollar?
The volatility that we're seeing in Asia FX, given how there's that strengthening coming through, do you think that's going to be further fuel for Asia bonds?
So I think, first of all, the currency stabilization is extremely important for the local markets in Asia for Asian bonds, and specifically the local currency denominated bonds. So obviously it's a positive backdrop. The second, which is an implicit impact of the Fed decision, is as Fed moves towards an easing cycle, it increases the window and creates room for the Asian central banks who have been in a waiting mode for the last 6 months because you don't have the inflation issue in a lot of Asian countries. They get a window to start easing. So both from a rates perspective as well as a stabilization of currency, your backdrop for Asian local markets actually improve.
Okay.
All right, Neeraj Seth of BlackRock, thank you so much for joining us with your views. We have plenty more ahead. This is Bloomberg. Let's take a look at some of these key names in chip production in Asia, all in positive territory today. And of course, we have been Bloomberg has been reporting the US is considering blanket restrictions on China's access to AI memory chips, high bandwidth memory chips, crucial to the development of artificial intelligence. We'll get to that story in a moment. TSMC is an interesting one as well, better by 2.7% almost. Also, another interesting story on the Bloomberg at the moment about how a number of retail investors in Taiwan consider buying the stock, their patriotic duty to protect their homeland from potential Chinese invasion. So chip makers are performing strongly in Asia at the moment. Well, let's get back to that story about the US said to be considering new restrictions on China's access to AI memory chips and equipment. This is a move set to further escalate their tech rivalry. For more, our China correspondent Min Min Lo joins us in Hong Kong. So Min Min, give us some more details about these latest measures.
Yes, Paul, this is targeted at the most advanced cutting-edge technologies when it comes to AI chips, the high bandwidth memory chips or HBM chips that are required in those AI accelerators offered by companies like NVIDIA. And the most dominant companies in making these HBM chips are SK Hynix, Samsung, Micron, for instance. And if these new rules come into effect, it will prevent these companies from supplying chips as well as the chip-making equipment to China. Now, this is part part of a broader push to curb China's advancement in these tech frontiers. We know China currently can already make the HBM2 chips. Changxin Technologies is the Chinese company that can make those. It was first made available commercially in 2016. And this broader package will also place sanctions on over 120 Chinese firms that will be designated a national security threat in an entity list. And the Biden administration is also looking to compile a list of critical components that China needs to make these semiconductors as well. And we know one way to do that is to use the foreign direct product rule, which can allow Washington to place controls on foreign products that rely on even the tiniest bits of American technology. And SK Hynix, Samsung, for instance, they still rely on U.S. chip design software, so they could be affected by this new rule.
Well, we're also told the US may consider exemptions from these rules for key allies, including Japan and the Netherlands. What's behind this consideration?
Yes, this was first reported by Reuters, and our sources are saying that the U.S. is mulling exemptions for certain countries, including possibly South Korea, Japan, Netherlands, and that's why we're seeing some movements in the stocks. The likes of ASML, Tokyo Electron could be unaffected by those new rules for now. But some experts are warning that investors could be mistaken by bidding these stocks higher, because one reason for the exemption could be that these companies are very likely to align with the U.S. anyway, even without the imposition of the FDPR rule. And the idea that Washington can impose these rules further down the road should these companies veer too far away from U.S. policy, that's always kind of casting a shadow over these companies. There's also pushback from these companies as well, because China is likely to be a very big market for them. And also the possibility that the FDPR could backfire if it incentivizes these companies to bypass American technology altogether to look for other sources of technology within their supply chain. So there are plenty of considerations here. And I think at this point, things are still very fluid, and we need to wait and see what the final package would look like and what the implications would be for the market.
All right, China correspondent Min Lo there. Other tech stories that we're following. Bloomberg has learned that Applied Materials will not be receiving US funding for a long-anticipated research and development centre. Sources tell us the US Commerce Department rejected its application for $4 billion in CHIPS Act money, saying the project didn't qualify. Applied Materials had said the California project would have been the industry's biggest R&D facility. Meta stocks soared in late trade after it reported better than expected sales for the second quarter. The company's investments in AI helped it sell more targeted and personalized ads. Meta says it had more than 3 billion users across all of its apps as of June 30, an increase of 7% from the year prior. Plenty more ahead. This is Bloomberg. All right, let's take a look at how gold prices are doing. They're hovering near record highs at the moment. And of course, it was about this time yesterday that we got the news that Israel had successfully assassinated the Hamas political leader in Tehran. Israel's not confirming or denying involvement in that. A Hezbollah leader in Beirut also killed on Wednesday. We've got oil moving higher as well. OPEC's having a routine meeting later today. No changes expected to production plans, but both of those assets are moving higher on escalating tensions in the Middle East. And the New York Times says Iran's supreme leader has ordered a direct strike on Israel in retaliation for that killing in Tehran of Hamas's political chief. So for more on this, let's bring in our senior editor, Bill Ferries. So, Bill, what happens next? How does Iran respond here without fanning this into a much wider and more serious conflict?
Yeah, the real big questions here are, the scale of the response that comes from Iran and, frankly, from Hezbollah as well, who appears to have lost a senior leader in the last 24 hours. The scale of the response from those two sides and then the response back to them from Israel will really determine whether this becomes a much bigger conflagration across the Middle East. You can remember we saw in April, after Israel's believed to have killed 2 Iranian generals who were in Syria, there was a massive drone and missile strike against Israeli territory coming from Iran. That was almost entirely shot down by both Israel's defensive systems and the U.S. and its allies operating in conjunction there. So the scale of the attack will really determine the ultimate response and whether this becomes a much bigger problem for the Middle East and the world.
Is it going to have any implications for reaching a ceasefire deal in Gaza?
It's very hard to see how this doesn't set the negotiations in Gaza on its back foot. I mean, Ismail Haniyeh, who was killed in Tehran, he was the chief negotiator for Hamas. He was leading a lot of these talks with the U.S., with Qatar, and the other nations involved. So his loss makes it much harder to see how these talks over a ceasefire continue in the short term. Longer term, a lot may depend on how the conflict continues to unfold there. But I wouldn't expect any peace talks to really be proceeding in the coming days.
Just quickly, Bill, what does it tell us about Israel's abilities to reach its enemies?
It's a really stunning message that Israel is sending here. They promised after the October 7th attacks to go after Hamas's entire leadership and eliminate them. It seems to be proceeding. It's also a message to Israel's enemies almost anywhere that you cannot hide in foreign countries. I think those are 2 key messages Israel's sending to the world. And frankly, finally, it also suggests that they're not going to bow down to international pressure to back off in the Gaza war.
All right, senior editor Bill Ferries there. Here are some of the stories that we're following. The U.S. urging all governments to acknowledge what it calls the overwhelming win of Venezuela's opposition candidate, Edmundo Gonzalez, amid disputes in election results. Washington is questioning President Nicolas Maduro's government for not releasing information on the vote. Maduro is asking Venezuela's top court to audit the results in a bid to legitimize his self-declared victory. The opposition has claimed it has proof that Maduro stole the vote. Republican nominee Donald Trump is questioning the racial identity of Vice President Kamala Harris. During a contentious roundtable with black journalists, Trump said he didn't know that Harris was black until a number of years ago. Harris condemns Trump's comments, calling them the same old show of divisiveness and disrespect. Harris's entry into the presidential race has seen a surge of enthusiasm among black voters and young people. China installed a new army commander for its southern region in an unexpected move that comes after recent clashes with the US and its allies. General Wu Yanan had been appointed to head the Southern Theater Command. The role oversees military strategy in the South China Sea, where the Philippines and Beijing have disputed territorial claims. All right, let's take a look at what's moving in global markets at the moment. We're seeing quite a bit of weakness for Japanese stocks following that decision from the Bank of Japan yesterday. It took a while for markets to really process what Governor Ueda had to say. But since then, we've seen yen strength, now just hovering just below the 150 mark. The Nikkei is selling off pretty hard today, off by about 2.5%. The Topix off by 3.1%. Elsewhere, though, we're seeing some modest gains in Korea, also here in Australia. Plenty more in a moment. This is Bloomberg. Welcome back. We've got China markets just heading to lunch, seeing a little bit of softness in the CSI 300 at the moment, up by a bit more than 0.5%. This follows yesterday, which was pretty interesting. CSI having its best day in 6 months without state support. Since then, though, we've had pretty weak Taishan manufacturing PMI sinking back into contraction. So Chinese stocks giving up some of those gains that we saw yesterday. Right, let's check in on markets elsewhere, including Japan, which is seeing quite a bit of selling at the moment. Avril Hong's taking a look. Avril.
Absolutely, Paul. Deeply negative on Japanese equities. Of course, this is against the backdrop of what we're seeing in most of the Asia-Pacific currencies, or the stocks, I should say, after the Federal Reserve kind of cleared things, the uncertainty out of the way about the September rate cut. But of course, it is about the BOJ. That's what we're grappling with here after the more hawkish comments from Governor Ueda. And I think, you can really see it in the dollar-yen moving below 150. Now, the Japanese bonds are picking up a little, but of course, yesterday we saw a lot of selling as well. Let's bring in Bloomberg's MLife strategist, Mark Cranfield. So, Mark, as you expected, they really did it. They hiked rates. What do you think is the main reason, though? Because when we look at inflation, it still seems to be more cost push rather than demand driven.
This is about removing unconventional policy, and it's a continuation of that. And there's probably still some way to go. Governor Ueda made it fairly clear when he came in that he was no fan of that kind of policy. So that's why we ended the negative rate policy. And now we're gradually trying to take Japanese rates towards something like a neutral rate, which he very interestingly has not clarified. He's not given a target for that, which is partly why the yen is so strong today, because during the press conference yesterday, he declined to put a cap on Japanese rates, which was a big surprise. So we had the most hawkish press conference from Mr. Ueda since he's become the BOJ governor, and that was a surprise to everybody yesterday. So you've got that going on. And then at the same time, he's looked through some of the data has been mixed, to be honest, in Japan. It hasn't been uniformly great, but he's very concerned that the inflation numbers are sticky. They're going to last for some time, and that's what he was looking for. He was looking for inflation to be embedded, and that would justify him getting out of unconventional policy and gradually lifting Japanese rates.
Okay, we'll pick up on your point on the yen in just a bit. But when it comes to QT, as you say, it looks like a gradual reduction in bond purchases. Between now and the first quarter of 2026, where do you think the absorption is going to come from in the markets for bonds? And how is Japan going to market these bonds?
Well, it's a good question to ask, because they're sending out a team overseas. We may have them here in Singapore soon. They're going out. This is something they've tried before. Actually, not the first time, but the Ministry of Finance has a team of people who will go and show the world that Japanese bonds are now the place to be. And of course, the yields are much more interesting than they were just a few months ago. So it may well be that with more confidence in the stability of the yen, the fact that there's a bit more openness in Japanese monetary policy, maybe foreign investors will be more keen to put some money into Japanese bonds, particularly when you look at the curve is relatively steep. If you go beyond 10 years, 20, 30 years, and you compare that to what's happening in the rest of the world, now Japanese yields don't look so small compared to what is happening in Europe, and with American yields, of course, coming down as well. So you've actually got a situation where, for the first time in many, many years, at the long end of the curve, Japanese bonds look quite good.
And we are also seeing that gap between the US and Japan on yields closing. Forward points also, I think there's an expectation we see further rally in the Japanese currency, but to what levels are you expecting it?
Macro investors are looking at all their different correlations now. They've all been upset by this rapid move in the yen. They're trying to figure out where on earth does dollar yen go to. We had Stephen Chu speaking earlier saying that his model says 143. If you look at the forwards, which are a pretty good indicator, that's suggesting 140. So somewhere in between the two. And we've got other people, we've got Bloomberg stories out today suggesting that the low 140s or even 125 might be an eventual landing area. So clearly, people think it could be a bit lower.
Which is bad news for those of us that are traveling to Japan soon. But do you see a hike in October as well?
Unless the data is shockingly out of line, yes. I think in a way, the BOJ was behind the curve anyway. I think it's almost acknowledged by Ueda that they missed a window, particularly in June. So by doing this one, they still haven't fulfilled what they were. He would like, I'm sure, to get rates up to a level that is more in line with the global average. And Japanese rates are typically a little bit below the other majors, like the European Central Bank or Fed. But the gap shouldn't be so big, and he would probably like to get a more realistic number. So maybe eventually close to 1% on Japanese yield. It won't all happen this year. But unless the data is really bad, he's gradually going to take them up to that kind of level.
Okay, as the gap between the US and Japan closes, and we heard from Powell overnight, do you think, if we do see a 50 basis point in September, that would signal some form of panic from the central bank?
It would need the data to really be very soft. And it's an interesting situation because we have 2 more inflation reports, 2 more jobs reports, a couple more PCE reports as well. There's a lot for the Fed to digest before they get to September. It could well be that the inflation numbers come in much softer than expected, and the jobs market, Powell acknowledged himself, cracks are beginning to appear in the US employment situation. If all of those things fall into place, the market traders will be starting to price for 50 basis points. By the time we get to September, it may almost be a de facto thing where the Fed says, well, we have to give the market what it's worth. But we need to see a lot of data fall into place before then.
Mark, the central bank fund is not over yet. After the BOJ and the Fed, we also have the BOE. Do you think Governor Bailey is going to get his way?
He has a coin. He's flipping it to see which way it goes.
And we're watching to see which way it lands.
It's a very close call. Some people are suggesting that there are 9 people on the committee. The vote will be 5-4. It couldn't be much closer than that. That would be slightly in favour of a rate cut. But from the point of view of the pound and other UK assets, what traders are looking for is the guidance. And it may well be that even if they cut rates today, they don't have the confidence to say that there will be more cuts to come or even give a timeline. So in that point of view, you could say it's mostly priced in. The pound may even bounce a bit. UK equities are probably reasonably happy. The ones that will be most concerned are UK bonds. The gilt market would like to see a path towards lower rates all the way through next year. They're probably not going to get it. So there's certainly room for UK bond traders to be disappointed today.
Well, we'll wait and see what happens. As you say, it's a coin toss. Mark, thank you as always for sharing your time and your insights with us. Really appreciate it. Mark Cranfield, MLife strategist. Back to you, Paul.
All right, thanks, April and Mark. Well, as we've been seeing, it's a bit of a rotten day on the Nikkei at the moment, but the worst performing sector on the Nikkei, Japanese real estate, that sector off by more than 8% at the moment as the fallout from that Bank of Japan decision continues. Real estate shares falling the most since March 2020. Of course, there's a concern now. Mortgage rates are going to go up. That's going to sap demand for mortgages as well. So we've got financials suffering also. Sumitomo Realty and Development continuing to notch up those losses, now off by more than 10%. All right, so let's take a look at some of the other corporate stories that we're following. Boeing's next CEO, Kelly Ortberg, says there's much work ahead for the plane maker. Ortberg is being hired out of retirement after rising through the ranks at aviation supplier Rockwell Collins. But the scale of the turnaround task he faces was immediately highlighted by a company warning that third quarter cash burn could reach $10 billion. Bill Ackman's Pershing Square is pulling an IPO for a US closed-end fund. That's after downsizing its fundraising target and facing difficult questions from investors. Pershing Square slashed the anticipated size twice in just over a week, from an initial target of $25 billion to just $2 billion. Ackman says the firm will reevaluate its structure based on investor feedback. All right, so we are counting down to the open of trade in India. Let's have a look at how the pre-market is doing. A couple of stocks to watch here as well. Tata Motors, we're waiting on earnings from them for the June quarter. Profit expected to jump there almost 64%, led by an increase in sales volumes. There have also been a number of price hikes for Tata's commercial vehicles over the past year. Maruti Suzuki in focus as well, already rising in the pre-market there. It reported net income for the first quarter that beat average analyst estimate. Net income there, 36.5 billion rupees. That was up 47% on year, and as I say, it did beat estimates as well. Employee benefits expenses, though, starting to climb, up almost 7% on year. Right, let's bring in our reporter in Mumbai, Satviki Sanjay. So, Satviki, talking about Indian automakers, how are they doing this quarter?
Right, so the earnings for Indian automakers have started to come, and Maruti, India's biggest car maker, had an incredible show yesterday. It beat estimates by a big margin, and that was largely led by its SUV sales in India. SUV has been the flavor of the season across India, and sales for its larger vehicles climbed, even as sales for its smaller vehicles and hatchbacks fell. Their profit beat was also driven by a significant cost reduction measure that was undertook by the company. So overall, at least for Maruti, it has been a very good quarter. Tata Motors, JLR's parent, Jaguar Land Owners' parent, is set to report earnings today. and investors are expecting profits to rise. The car maker took some price hikes over the last year, and that's set to aid in its profit that's supposed to come out today.
So prices are going up. How's demand holding up for these companies?
Right, yeah. I mean, demand for this quarter, the first June quarter of the year, the first quarter of the financial year has been somewhat subdued. This was on the back of heat waves in India, extreme heat in the season, as well as the national elections which took place from April to June, and that led to some fall in demand. But now automakers, with everything back in motion, see the festive season that starts from October onwards to aid in car sales.
How about plans for electric vehicles from these firms? What more do we know there?
Right. India is one of the biggest, fastest growing markets for electric vehicles right now, and every car maker in India has big plans to bring out an electric fleet. Tata Motors is actually bringing out an electric SUV. Next week, Maruti has plans to bring out 6 electric cars all the way up till 2031. The first of which will start rolling out in January next year. The second one is also expected to come soon after that for Maruti. And since it's India's biggest car maker, investors, analysts, and car lovers are eagerly anticipating their launch. Tata Motors has a big lineup coming up in terms of electric fleet as well. And Mahindra, which is known for its big SUVs that are driving the surge in its profits, is also expected to bring out a big fleet of electric SUVs in the coming quarters.
All right, Bloomberg's Satviki Sanjay there in Mumbai. Another story that we're following on that front, Chinese EV maker BYD is looking to enter the Canadian market. Lobbyists for the company have filed notice just as the Trudeau government wraps a consultation on measures to restrict Chinese imports. Meanwhile, BYD will team up with Uber to put 100,000 EVs onto the ride-hailing company's platform, and that tie-up will start in Europe and Latin America. It's not, though, going to include the US. Plenty more to come. This is Bloomberg. All right, let's take a look at how shares in UOB are tracking. This is Singapore's third largest bank. Net income for UOB, a slight beat there, 1.49 billion Singaporean dollars. The interim dividend, 88 cents, and that was up from 85 cents on year. So we've got UOB shares just drifting a little bit lower in Singapore at the moment. Well, let's talk about UOB's earnings momentum with the company's group CFO, Lee Wai-Fei, who joins us exclusively now from Singapore. Lee, thank you so much for your time today. I just want to start, if we can, talking about the macro environment, because we are now in an era of falling rates, global easing in most markets, Japan accepted. But what are your plans for driving profit? Because we also saw your net interest margin contracting a little last half.
Yeah, thanks, Paul. I think, like we all discussed, we are probably in the regime of the higher for longer. I think there are a lot of talks about yesterday's Fed's decision, how they balance between inflation and unemployment. But our view is that probably they will need to make a rate cut, like the market expect in September. I think one thing to note is that a falling interest rate actually is good for business. Okay, and we have actually seen that the volume actually started to pick up in the second quarter as the market and our customers are comfortable with the rate environment. So we already seen some pickup in our commercial activities and our loans business. So there is also pickup in wealth management, because as the market outlook becomes more certain, whether it's up or down, customers' confidence are now picking up. So we expect the first half trend to continue, and we are quite positive that if the rate hikes are moderate, we'll be able to manage it.
We were speaking earlier this hour to Nero Seth of BlackRock. He saw up to 4 potentially rate cuts from the Fed heading into January. What's your expectation around the rate cutting cycle?
Our in-house view probably is not as aggressive. We think that probably there will be 2 rate hikes, mainly because of the environment that we are in. Singapore will be the most affected. The countries themselves probably will only react because they have not raised interest rates significantly, and if they were to cut it, it's to make sure that the exchange rate doesn't fall off. So we're a bit more optimistic that the rate cuts in this part of the world will be more manageable. Probably the in-house view is probably two cuts this year.
So if we talk about UOB a bit more specifically, you've recently acquired some of Citigroup's assets in Indonesia, Vietnam, Myanmar, Thailand as well. What are your plans for growth in these markets and elsewhere in Southeast Asia?
So yes, we have acquired our portfolio in Malaysia, Thailand, Indonesia, and Vietnam. We have also announced that we have completed the operational integration probably in Malaysia, Indonesia, Thailand. Vietnam is a market that will complete next year. So we have the size in the countries, and probably now is to look at where the growth is. And you think about it, what's happening in Southeast Asia today and what's driving the economy? Tourism is one factor. So if the tourism holds up well, I think our consumer business will be doing well. The second part that we are trying to do was to actually sell the integrated platform. Today, I do have a franchise that is well engraved in Southeast Asia, and people who come and deal with us doesn't deal with us on the individual countries. Okay, people who are interested to take the cards in Malaysia or in Thailand are because that if there is a Singapore activities, a lot of them talk about shows in Singapore. They get to participate in. So that is where we are driving. The second part that we hope to do is that as the market stabilize, we think that the wealth business will increase. Citi has a very good portfolio. The customer base is very stable and the quality is very good. So we hope to drive fees income a bit more aggressively in the second half as we integrate into this. So we are actually very positive of the consumer business with the Citi integration.
And how's your appetite for more M&A? Do you see any more coming in the next few months?
M&A will always be there. Investment bankers will always come and talk to deals, and I'm sure people know that there are deals happening in the region. But I think for the time being, we really look at if there is a deal on the table, what are we acquiring? So far, there's none that actually meet our expectation or fit our expectation. We like to concentrate to grow our organically. There is work to do to get our regional market into a bigger scale. Both, we spoke a bit on the retail side, and in the wholesale side, I think is where a lot of the activities are. The cross-border activities, and we know that the supply relocation of the supply chain, those are actually working to our favor, and trade will remain strong as well. So I think our potential extensive footprint, right, coupled with our strategic investment over the past few years, I think that is now bearing fruits for us. So we prefer to make sure that we can lead and ride through the next part of the cycle to grow organically before we look for M&A opportunities.
So just speaking to Singapore domestically, how do you see the wealth management industry developing in Singapore? Because there are now some stricter rules in place.
Yes, I think wealth management development, I think after a very sleepy 2022, 2023, I think has picked up over the world. Singapore, unfortunately, is always compared to Hong Kong. But Singapore is actually a more diversified market. Hong Kong, I think the concentration will be the wealth inflow from China. For Singapore itself, we do have a diversified market. China is still a big inflow for us, but we do have the regional markets like Indonesia and the rich of Thailand and all. And India. India is actually a big market for us. So we do have a more diversified source of wealth. The challenge is, why do people come to us here? Of course, the macro and the government's political stability helps. I think we are more transparent. More important, I think what is changing is technology advancements. I think the use of technology, the use of AI will be addressing a new group of wealth management people, including family offices to Singapore, compared to what I call the old wealth that we saw in Europe. So we are excited. Okay, we're excited with the growth, and we see the flows coming in, and we hope that with our regional footprint and network, we'll be able to tap that flow as well.
All right, Lee Wai-Fai, Group CFO of UOB. Thank you so much for joining us today as UOB reports earnings. Let's take a look at Singapore Air, how that's tracking in Singapore as well. Also reporting earnings today. It wasn't too good either. First quarter net income there falling 38%. So we're seeing some declines for Singapore Air stock as well. Lower passenger yields, higher costs behind this number. First quarter profit falling to 452 million Singaporean dollars. That's compared with 734 million a year earlier. The outlook's not too good either. Passenger yields expected to stay below the previous year's levels as more capacity comes on. Let's take a look at how India's tracking. Been open now for coming up on 8 minutes, and already we've seen the Nifty 50 index crossing the 25,000 point mark for the first time. So that strong Indian market narrative remaining in place. We're seeing all of the major markets in positive territory, and the Nifty crossing 25,000. That's a record. All right, plenty more to come. This is Bloomberg. All right, let's take a look at how futures in Europe are opening at the moment. Bit of a mixed bag there, slightly higher to flat. And just when you thought all the rate action was out of the way, nope, we've got the Bank of England up next. Now, this one is really on a knife edge. Investors last night placing a 57% chance that we'll see a quarter point cut in the key rate there, down to 5%. Most economists surveyed by Bloomberg do expect a move. We're also going to get a new set of growth and inflation forecasts for the UK as well. Also waiting on inflation data out of the Eurozone, so that's something to keep an eye on. In the meantime, we've got the British pound at the moment kind of flat against the US dollar. All right, that is it from Bloomberg Markets Asia. We've got Horizons Middle East and Africa up next. This is Bloomberg.